Yeah, those.
I have to sneeze. All right, I'm calling to order the meeting of the Finance Committee, July 10th, 2023. The agenda is on the screen and it's posted also on the website. Are there any additions or deletions to the agenda? Kareem, are you raising your hand or you're? Kareem, any addition or deletions to the agenda? I wasn't sure what your arm motions meant.
No.
Okay.
It was internal here.
There are no citizens other than our citizen volunteers, so there are no citizen comments. Tom Weschler actually has a question or a comment for the committee about an issue that he wants to raise. I don't understand the acronym he was using, so I suggested he's not on, so he'll have to bring it up at the next meeting. This is really an issue for Eric and well, so let me just comment briefly on the remaining agenda. We are, I think, facing headwinds in all of the areas that are on the agenda. And there are some areas that we aspire to work on that are not on the agenda. Because until we get through these headwinds, there's no point in focusing on those, like long-term planning, things like that. We're not going to solve these today. And I will be the person, I'm always wanting to dive into the details and trying to solve problems in the meeting and so forth. That we have to avoid that. And if I start doing that, please take me off of it. I think it's important that we get through this and that in each case, we decide what direction we're going in on that particular topic, rather than trying to do problem solving. So that may mean that we don't dive into all of the details, particularly on management reporting, where there are a lot of details to report, because we have not yet hit the headwinds. We are about to. So anyway, the general theme here is let's make sure that we know what is going to happen next on each of these topics, rather than trying to completely solve the problems inherent in each one. And again, I'll be the biggest violator of that rule, so call me to task for that. The first point is very straightforward. We need administrative support. We need someone who will take minutes at the meeting. And it's not appropriate to have volunteers doing that. So I will simply ask Eric how he would like to address that. But I just think this is sort of a fairly obvious point. I should have asked for it on day one, but didn't. So is there any discussion of that? Okay. We have 4 things on the agenda, all of which are kind of current and hopefully will be valuable for the upcoming budget season. And I thought we should walk through each in the order in which it's said. So Jill, do you want to just give the group an update on where we stand on the capital plan development?
Yes. So 2 years ago, with the help of Sarah Macy, a group of us developed a capital plan. It was a good model. It won an award. We didn't get to update that plan last year. And during the budget process, it wasn't really referred to very much. So it's had a year of doing nothing. So it's time to update the plan. I had a conversation with Eric to see how we can go about doing that and how it will fit in with the budget process. And his feedback was that in his experience, you get the managers involved, giving input for the capital plan at the same time as you do for the next year's budget. And so he saw that continuing. The tricky bit that we had, the tricky discussion we had was that in order to do this plan, we think we need, we as a committee need extra resources, and we don't think that Zoe has that capacity. So we're talking about asking for extra resources, and those haven't been identified or obtained yet. So there's a limit to what we can do to update the capital plan. Although during the budget process, we can get people thinking about the capital plan and about the projects that have already been identified and costed out, which in some cases is like fire apparatus for the fire department, which isn't going to change drastically. So there's a limit to what we can do, and I think the next step is to see where Eric's got to in his thinking for that.
Any comments or questions? That's clearly the next step. I have a quick question, Jill. Is there, with the development of a simple, this is, please give a short answer to this question.
Mm-hmm.
Yes or no? Would the development of a form and a request from Eric that department managers fill out that form allow us to build a long-term capital inventory without outside resources?
No.
Okay. All right. Any other comments or questions? And what are the implications? So I have one other question. What are the implications of not getting the resource and therefore not doing the work? The budget process would then proceed the way it did last time, in effect?
Mm-hmm. Yep. It just means you make short-term decisions. You don't really have a plan for your what capital reserves you should be saving for the future, or when you're going to need to take out bonds for future developments.
Mm-hmm. Okay, so the next step is to have the resource discussion with Eric. Zoe, do you have any insight into that, or has he talked to you about it at all? I don't know if you're involved in that or heavily or not at all, or somewhere in between.
Eric hasn't had any discussion with me about that.
Okay. All right, Jill, will you have that discussion with him?
Yes.
That'd be all right. I don't think there's a problem breaking these things up. There's probably going to be a couple things that on management reporting we need to talk to him about, but they don't have to all be together. So. Okay. On management reporting, Ellen, Tom, and I met several times and have made a lot. We've made a lot of progress and progressed only infinitesimally in the overall project. That's a measure not of how much progress we made, but how much work there is to do. We did a lot, but we haven't gotten very far. And so I'm going to share with you what we've done and give you some examples. And Ellen, jump in at any time, obviously. I think you'll recognize everything here, but
yeah.
You got my email yesterday, by the way, right?
I did.
Okay, good. Yeah, no rushes. Okay. So what we agreed on is that we want certain simple capabilities from management reporting. And we broke it down by the time frame because we think that people think about it that way. The first thing people think about is during the budget discussions. That's what happens first. And then we think about, well, what do we need throughout the year? And then we think about over the long term. And I don't think any of this will surprise anyone. It's consistent with what we've talked about before, but just to kind of put it on paper and keep it really simple. What we would like during the budget discussions is to be able to drill down to provide detail in real time. There were lots of times when, and basically Zoe is coming with these huge stacks of paper and has the information in different places, but can't always, answer the question immediately. I mean, remember there were times, Zoe, when you would get up from the meeting, go into your office, and 5 minutes later you would be able to come back, and then there were times when you'd have to come back and report, offline and so forth. Obviously, there will be some questions, I suppose, that we can't answer in real time, but it would be great during the budget discussions if someone said, well, why is this, what makes up this number, if we could click a button and so forth. And we've made some conceptual progress in this area. We've made progress on a couple of these areas. We have a kind of a conceptual model for how to do that. Throughout the year, I think we want to be able to do two things. One is we want to be able to forecast the full year as accurately as possible, which really means taking into account seasonality. We made a teeny bit of progress in that area. I'll give you an example. And we also want to be able to provide department managers. We want to be able to have our management reporting at the department level. Whatever we're doing for the town or the village or overall, we want to have that broken down into departments wherever we can. And then over the long term, we want to do two things. We want to be able to identify trends that might need to be further studied, like certain costs are kind of getting out of line based on the past. Show you an example of that. And then, as we've talked about, we want to maintain a long-term plan that includes the capital plan, but also includes, that we can basically say this is where taxes are heading over the next 10 years, given what our capital needs are and our trends and costs and so forth. So I think Tom and Ellen and I agreed on that. The other four of you have any comments about that? This isn't an objective for this year. This is what we want to get from management reporting. I think it's probably a it's not a decade-long objective, but it's probably 2 or 3 over the next 2 or 3 years.
It seems reasonable, John, and I like it's relatively simple, which is good.
All right, Kareem. Oh, you're muted, Kareem.
Sorry about that. So there's a budget section, a forecast section, and a long-term section, right? Under the forecast section, especially since you just put it in context, which is this is not for this year, but hopefully by the end of 2024, right? Isn't a piece of that also to, at some point after we build in the seasonality, et cetera, where something would be automatically produced, let's put it this way, as a first stab, right? Based on what we've seen in the past. Isn't the ultimate goal to, at some point, have the department heads own this and create a forecast, not only based on seasonality, what they've seen the years before, but based really on what they know is going to happen for the latter part of the year as they move through the year?
Yeah, I would say that yes, I would say that, and that I think that falls under the heading of forecast full year as accurately as possible. I mean, there's a lot I know we will start with an automated process that requires no work. But yeah, I mean, forecasting it as accurately as possible. There's a value, one of the values of management reporting is forecasting accurately.
Right, I misunderstood then, because the second bullet said that we're providing department managers with the forecast.
Okay, no, sorry. No, sorry. That's bad wording. What I really mean is provide them with management reporting at the department level. Be able to drill down to departments.
Okay, all right, so that clarifies it.
Yeah. Whatever we mean, whenever we're talking about what we're going to talk about today of necessity, and I'll explain why, is the town village sewer the town village combination. But the objective is whatever we want for the town and the village, we want to the extent we can get it for departments as well.
Okay,
that's what that should say.
Okay.
All right. Anything else, Zoe? Anything you want to add? And again, we could change this in the future. Doesn't have to be.
Yeah. No. I just want to make sure that we're all on the same page.
Zoe, anything you want to add?
No. Nope.
All right. So here's what we've done so far. The first thing to notice is that in order to do the above, what we just talked about, we need 3 management reports. One that talks about things, money coming in, money going out. One that talks about our assets and liabilities, and one that talks about our cash. We've only focused on the first. By the way, and I'm going to use terminology that is not municipal accounting terminology, because this management reporting I don't think there's, other than Zoe and Eric, I don't know that there's anyone, Zoe, you can confirm this, but other than the 2 of you, I don't think there's anyone on the municipal team who understands municipal accounting and the differences between it. So I'm going to use more common terms that I think most people will be familiar with. If that becomes a problem, we can use the municipal accounting terms.
Oh, no. But I mean, when you talk about, income and revenue, that's fine. We definitely do a balance sheet. I have a trial balance.
Right.
So those things are certainly well within the realm.
All right. And if we get off, if you think, Zoe, at any point it's going to be confusing, just say, and we can always, obviously we can change this. So what we've done so far is we've extracted all of the revenue and expense data from NIMRIC since 2015. Every end of month balance in every account, 1,314 accounts. It's less than there were before. Well, I don't know, maybe I miscounted before. I've been saying 1,700, it's only 1,300. Now, we've created a simplified format for revenue and expense. And we've taken a first pass at putting the data into that simplified format. And I just want to show you what we've done. We've done nothing on the balance sheet. We've done nothing on the cash flow statements. And because we've done those things, we've been able to, we can start to see how we might do a few of these things in all three timeframes. We can see a little bit what it might look like to drill down. We can see a little bit what it might look like to forecast with seasonality, because we have data by month now, and we could see what it looks like to identify trends. So here's what we can see. So sorry, now I've sent this to you. This is, make this as big as possible on your screen. This is the simplified format. This is a simplified format. And
Can I say something? I'm so
Yeah.
sorry.
go ahead, Zoe.
So as I look at FY20 and FY21, there's a huge jump in the tax revenue.
Right. Oh, no, there's a huge jump in the revenue.
Well, I'm just speaking tax revenue specifically, 5.2 million and 6.4 million.
Yeah.
Okay, so when I look at that, my guess is that the police are involved with the FY21 taxes, and they are not involved with the FY20 taxes. So just something to point out, because that would be a huge jump.
Right. So Zoe, what you just said, and in a minute, we're going to talk about what needs to be done next. And we need to sit down with you and do a lot of what we just said, of what you just did. So,
Well, I know it's easy for me because
Right.
I know it, but yes, I mean, if somebody else looking at that, they would really question, why was there such a jump?
Right. So there's a stage of this process where, and we're at that stage now, where Tom, me, the other Tom P, me and Ellen can't go further than this without you. And so we've been avoiding asking for your time and so forth, as Eric, understandably, and as Eric has asked us to do. But at this point, to take this further than this, the first thing we need to do, there may be more, but the first thing we need to do is to go through in detail with some of the things, make sure that we're understanding the accounts properly and so forth. So here's the simplified format. And the idea is that this format would be used at every level. It'd be used for the town, it'd be used for the village, it'd be used for the sewer department, it'd be used for the EDC, it would be used for the combination of those, it would be used for everything. And yeah, so we've got this simplified format, and we've put the numbers into the categories. And you can take a look at this. You've got a hard copy of this in your email inbox, so feel free to take a look at it. You'll notice lots of things that require work. Like, for example, you'll notice that there's a jump in revenue from FY20 to 21, from 7.7 million to 14 million, and then back down to 9 million. And the reason for that is NIMRIC reports revenue of reports lease and loan proceeds as revenue. Now, that doesn't mean that that's how it appears in the town report, and it doesn't mean that that's how it should appear in the management accounting reports. But when we ask NIMRIC to export all the revenue, it exports the loan for the ESP building.
Also, and I will say it also does that when Tyler audits. You'll see that we have a great year, and then it dips too. So that's accounting.
Oh, okay. So
report.
that is
Yep.
accounted for in municipal reporting. So
It is.
that's not, I mean, I don't.
And so you've asked that question specifically, John, yourself. So we had money come in from ESB. One year it looked great. And then we had expenses the next year and it didn't look so great. And you were wondering, well, why? And then Tyler's answer to you was look in the footnotes. Because
Right.
it wasn't systematic in a spreadsheet or in all the numbers, it was a footnote.
So,
Right.
sorry, is that the proceeds from the bond that was issued? Okay,
Yeah.
but
Yeah, so we
principal on a loan doesn't belong in an income statement.
No, hold on. Pause for 1 second.
Yeah.
Kareem. Raise your hand if you are an expert at municipal GAAP, which is different from GAAP. Right. So none of us, I've started down that path and retreated.
Mhm.
None of us want to become experts on municipal accounting. For the purposes of, with due respect to municipal accounting, and it's not the people who are doing municipal accounting, it's just the accounting concept. For this
Correct.
reason, and not only this reason, municipal accounting is of no help in running a tight financial ship.
Right, because it is showing your revenue one year and if you don't take all that money out and expense it in that same year, then you have expenses especially if it goes from year to year.
So this topic is management reporting, which does not require, it requires us only to say what would be good for the town of Woodstock and how do we want to report that.
Right, so if I may, this is obviously going to show up in the cash flow statement because it's cash that came in the bank, right? The only thing that should show theoretically, and again, we're not expert in municipal, is the interest payments, right? Because that would be something that would hit an income statement. Is it okay if we normalize this and bring this below the line and bring, for example, tax revenues below the line?
It's not just the interest. Actually, if there is a payment, it actually is going to show in that next year as well. So like we took out a loan for $175,000 for a truck. Great. So we took it out in FY, let's just say 22, but the payment wasn't due until FY 23. So we saw the money come in and then we only had one payment of expense that next year.
So Kareem and Zoe, I think, so we are going to define that we need to keep calling this management reporting. That's why I'm not calling it financial reporting. I'm calling it management reporting to differentiate it from municipal reporting or the town's accounting system. We are going to define how we report what we think we should be reporting under management reporting. We're not going to change the municipal reporting.
Yeah, I agree.
But we're going to define it, and how we define capital expenditures, how we deal with capital expenditures and loans are two enormous things we're going to decide, not here, not today, but we will soon. We have to have a discussion about what we think is most useful from a management and town reporting perspective, not from a municipal accounting perspective, which will continue the municipal accounting because we have to do it because we're a municipality. So we have complete control over this. We can choose whatever we want. We can draw lines wherever we want. We can amortize things. We can accrue things. We can do whatever we want.
Yeah. So I guess
this shows the need to do that. Otherwise, you get results that are nonsensical, which is these results.
I guess what you're saying is we would create a quote unquote a normalized, let's call it income statement that would allow us to make decisions on spending that would not have noise in them that is actually giving us a false picture of what's really going on.
Nor do we want to encourage managers through the use of management reporting to make bad decisions.
Right.
We want to do we want proper management reporting, which is different. Some people, so yes. I mean,
one of the challenges that I foresee, and well, I don't know if it's a challenge, but one of a change of habits that I foresee is that both the village trustees and the select board will need to learn to look at the same time at an income statement, a cash flow statement, right? Because that's what's going to drive whatever is needed from a tax point of view. And then on the side, take a look at the balance sheet to see the changes in whatever happened, on our assets and liabilities. So, okay.
So we've basically come up with this. It absolutely can be changed, but we just use this. And when I say we, I just made this up. And Ellen and Tom looked at it and said, well, okay, let's start with that. They may have some we haven't gotten to the point where they've said, we think we should change it but we can change it. So one of the things we wanted to be able to do is to drill down to provide detail in real time. And let me show you what we might be able to do that using the model that we've built. And I just want to give you a sense of it. So this isn't fit for human consumption, but this is the spreadsheet from which, so what you just saw was a static screenshot of this rectangle here. But this is a live model. And let's just take, for example, an interesting number here, which is professional services. $300,000 in professional services. Oh, wait, sorry, you're not seeing this, right?
Yeah, we are.
Yeah, we can see it.
And you can see my cursor because for some reason.
Yeah.
All right, hold on 1 second. Sorry, I have to stop it. Something is stopping me from getting to it. Hold on 1 second. So here's professional services, $298,000 in FY '23.
Mhm.
And a select board member says, well, what is that? So in the meeting, if we use this, we could double click on it. And it'll tell us, it's gonna sort here, let me make it a little bigger. It's gonna sort it in order from the biggest to the smallest. There are hundreds of these transactions, and we can simplify this further. This is, you know, these accounts, this is every month. We could just summarize it by account, and it would probably be 15 or 20 lines long. And that's what's making up, if you go all the way down, the
This is great.
290,000. So that's what we mean by basically being able to drill down, to have Zoe have the tools and the select board have the tools, basically.
And we'll be able to sort it also by department in case, like, for example, if we're looking at salaries, instead of from the highest to the lowest, we could sort it by department if we need to here in the drill down, correct?
Sure, we could sort things, we could sort by department if our expenses were classified by department.
Okay.
They are, except where they're not. And so we have not yet started to look at departments. We have some of the data in the database is allocated by department. Much of it is, but not all of it is, and not all of it can be. So drilling down this objective, let me go back to our PowerPoint. Going back to our objective of being able to provide department managers with the same information that we're providing overall, there's work to be done, and we're not ready to do that yet. We've done something. There is a place in the database for departments, and some of it is filled in. So the second thing, so another thing we want to be able to do is forecast the full year as accurately as possible. And because we've classified all the expenses, or 99.5% of the expenses into those categories, we can now look at how those categories are occurring throughout the year. This is overall, this is all expenses, not just by category. I'm going to show you that in a minute. And this is funds 1, 2, 3, and 5. So 1 is the town, 2 is the village, 3 is the sewer, and 5 is the police. So it's part of the town. It's just those, and it just goes through FY '22 because this is up through May. We have data up through May of 2023. And so what it appears is that we're doing a lot of entries into our system in June, not surprisingly, given our processes. But that's going to hurt us in terms of having accurate forecasts for the year. I actually ran an organization where we had our business look like this, and we changed our fiscal year to move to start here, so that if we had a bad month, we had 9 months to fix the problem. I believe that this problem has to do with, sorry, there's some background noise. Oh, thanks, Kareem. Anyway, so there is some fair bit of seasonality here, but more importantly, when you begin to look at the individual lines, there's a lot of seasonality. So for example, this is the percentage of our expenses that occur in Q1. And so, for example, in insurance, and the way we report currently to the select board is after 3 months, we say, you know, we're at 25%, or we're at 23%, or we're at 30%. And if we're at 30%, then we're worried. And if we're at 20%, then we're happy. And this shows that isn't, that in the case of insurance, for example, we'd be drawing precisely the opposite conclusion for what was happening. If we were at 30% after Q1, we should be happy. If we were at 40% after Q1, we should be happy, because we're doing better than what we normally do. So this begins the automated part of the process, and this is based on 8 years. This is based on 8 years worth of data. So again, we have to look at it, but classifying the data the way we have gives us this ability. And another thing that we want to be able to do is to look at long-term trends that may be needed to be further studied. And once we've done the classification, we can begin to see that. So here's this bar chart, shows benefits as a percent of salary and wages. And it includes FY '23. We estimated what June would be based on based on this pattern, we assume that this is 12.7% of our the salaries and benefits. We looked at this, sorry, we looked at this line. Anyway, we estimated June. Maybe we did it wrong, but there's a pretty clear trend. It's gone from 30% to 40% benefits as a percentage of salaries. That doesn't mean we're doing anything wrong. It might be that we've done great because it should have gone to 50% and everyone else has gone to 50%.
John, do we know what benefits have increased? There have been some that have increased, some that have decreased, some that have stayed the same.
I don't know, but the data is in there. Yeah, I mean, yes, that's from a management reporting. I think the role of management reporting is first to identify that this might need to be looked at to answer the kind of questions you're asking. It might be, but to date, we can't do that. And I'm not even sure. I mean, maybe that kind of, these are one-off analyses that have to be dug into rather than a routine. Not, I mean, this should come, this chart that you're looking at should come directly from management reporting. But to go beyond that might need some consultant, or to have Zoe spend extra time, or to hire another person, or to, have people research the issue.
So
How
one
about-
thing I'm just gonna throw out there, and just so we all remember this, is that in FY21, we hired, I believe, 8 new firefighters. We made that a permanent position. And just keep that in your mind as you're looking at all that stuff, because that really was a huge thing. We took a huge hit for insurance, benefits, salary, again, nothing specific, just trying to remember that.
No. And Zoe, that may be, in other words, I want to differentiate between the role of management reporting, which is, I think, to identify an issue that may deserve some work.
Yeah,
And
no, this was
work,
not
which is what you're
anything other than information that we might forget down the road, that's
Yeah,
all.
okay. So that would be, Tom, that would be the kind of response that this reporting would generate. Zoe would say, well, the reason for this is, and here's how, and we'd calculate it and say that, when we went to those fire people contract. Anyway, you get the idea. But the point is that that management reporting should be helping to identify trends that may need to be further studied, and this one may need to be. Now, just to give you a quick snapshot of why we haven't done this up until now, is these are our salary accounts. We have 65 salary accounts and 50, no, I think maybe 63, I think that's wrong, and 55 employee benefit accounts. I don't think we have 65 full-time people. Do we, Zoe? Maybe we
don't. No, we have closer to 35.
Right.
But keep in mind, a full-time police officer splits his time between town and village.
Yeah.
I split mine between 3 or 4. So
Right.
everybody has more than one, which makes that interesting. Then even though we don't have a full-time, we have a full-time firefighter, we also have voluntary, then we have a voluntary EMT. So
Right.
even though we don't have 65 full-time, even those part-times
Right.
listers make up another category. And they're elected officials and they're part-time.
Right. So at some point, we and not now, but at some point in the future, we will need to re-examine this. And there's we don't have to have all these accounts. We could have transactions where the detail, anyway, there's lots of ways of dealing with this, but it's the reason why you haven't seen this chart before. Is because in order to get this chart, you have to go through these 120 accounts and add them up for each of 8 years, which hasn't been done until now. So
this is very powerful, by the way, because I can see how it could lead to conversations, because
exactly.
benefits as percentage of salaries is one way to, skin a cat, but then you want to look at the absolute benefit number, compare that increase to that, because here you can say it went from 30 to 40. It's not a big deal in 8 years, but then you can look at it a different way as well. So this is very powerful.
Yeah.
This is great work, by the way. It's great.
Yeah, obviously we can look at growth rates for each of the lines on the income statement, and see which things are growing. There are things that are growing at 280%. There are things that are going down over the 8 years. So we can do all of that. So what we need to do going forward is still just focus on the income statement. we need to agree on that simplified format. So a next step is probably to sit down with Eric and Zoe and say, you know, does this make sense? Just the left-hand column? Or do you want to consolidate some of these things? Do you want to break some of these things out? But it's going to look something like this. It's going to have, you know, 8 or 10 rows of revenue and 20 or 25 rows of expense. It's not going to have what we have now, which is 1,365 of these, 1,320. So we need to sit down with Zoe and Eric and review that. If any of the rest of you have comments about it, that's fine. But I think right now, Ellen, Tom, and I are happy to drive this. We need to confirm and resolve some of the mappings with Zoe, like the thing about the loan that Zoe brought up, the $5 million. And there's other things as well that we may not be classifying right. We may not be understanding the words, so forth. And to our earlier discussion, Kareem, the issue that you and Zoe commented on, we need to confirm the accounting, what accounting we want to take in management reporting for things about like capital expenditures and loans and so forth.
Mhm.
And importantly, we need to reconcile the data with the audit. And I've done that in the past, and it's difficult. It's possible, but it's difficult work. So that's the work that's next. I think that's basically it.
I have a stupid question. I'm assuming that wherever that work is residing, it's backed up on a separate disk on the cloud somewhere, because it would be horrible to lose that information if somebody's computer crashes.
You mean the spread?
We work on the cloud.
Okay, great. All right, good.
Well, but
So there's automatic backups. All right,
and the spreadsheet is also everything. Yeah.
great. Okay, good.
Also like that.
Yeah.
Okay, so that's kind of where we are. I think the next step here is, I think we need to ask Eric that to have some of Zoe's time to go through. I don't think it makes sense for us to push much further without going through and getting, and I don't think it's an infinite amount of time. It's not thousands and thousands of records, but I think if we could have, a couple of 2-hour sessions with you, Zoe, to go through, get halfway through the first time and halfway through the second, if we got feedback on certain kinds of accounts, I think we would be able to extend that. Like
Yes,
how
and
you
it's
handle cars, there's 60 accounts with cars.
Sure.
If you told us how one of
Yeah.
them was handled, we wouldn't have to do the other 59.
Yeah, no, and honestly, it's a little easier. I'm much more caught up than I have been in the past, so I think it's much more possible at this point.
Okay, so I'll ask Eric about that as a next step. Okay, the third item is healthcare analysis. And Kareem, I did not include a document here, but and we just actually got an email a few hours ago, or at least I got copied on it from the school. I think it's the school.
Yeah, it lines up with what I heard from the CFO.
Okay.
Yep.
Well, I think that I'm going to let Kareem describe what happened, but I want to raise a concern about it. I think Kareem has started some benchmarking. But I think, Kareem, my question is really, when do we feel we have the right sources that we could sort of share this information and make a point about it? Because I feel like the way this first set of data was generated, and I understand how you did it, is probably opens us up to, I think, significant criticism that we're jumping the gun before we have really enough point of data. So do you want to just describe? You could disagree with that, but that's why I didn't include a document yet. But I wanted to put this on the agenda. So why don't you describe what you did, and let's talk about it.
All right, should I share the document?
Sure, you can if you want. Yeah.
Let's see. Where do I go for that?
Hold on. Yeah, let me give you. I have to give you permission. Give me a second. Okay, go ahead.
Okay, share screen. All right, can you guys see that?
Yeah.
Okay, so first off, before I jump in, I have to point out that Ellen is the one, where's Ellen? Is she still here?
I'm here.
Okay, Ellen is the one who did all of the data collection around this. And then we got together, the two of us, and I volunteered to put together sort of a quick deck in order to take all the data that she put together and try to explain it, as simply as possible. Okay. So
Well-
it's really a shared effort.
Can I just mention, Zoe gave me all the data.
Yep.
Last December, and which allowed this to happen.
Okay, great. All right. So quickly, this is the background, really, and I'm going to move fast because I have a hard stop at 2, guys. Okay. This is really to say that, you know, one of the things that we look at is opportunities to save money, right? And one of the areas that was identified potentially is health insurance costs, and specifically, you know, what might be the percentage shared between what the employer is paying municipality and what, you know, the staff is paying. Okay. This is the current status of the benefit cost allocation for the health insurance. Right now, on average, the town and village cover about 93% of the health insurance cost, and the employees cover about 7% of that expense. And this is taken from the information, again, that was collected by Ellen and provided by Zoe. Okay. However, we need to put this in context, right? How do we arrive to that number, and why are we arriving to that number? For a variety of reasons. There are a number of union agreements around the police, the dispatch, town, highway, and sewer, and then fire. And there's also the non-union employees. So there is, even though it's not a union agreement, there is an agreement as far as how that's going to play. Okay. And so all of these things combined, put together, lead to, you know, that about 93% versus the 7%. Okay. So this is a little bit of the background, and also it starts to provide, from an informational point of view, where might be opportunities as those agreements are coming up to further negotiate and see if we want to change those parameters or not. All right. So now is the piece that is the projection, and that projection was built on assumptions around the estimated health insurance cost inflation, which is fairly large, and it's much larger even in our higher inflationary environment. So that taken into account, and that's a major assumption that we need to indicate here, but it's not surprising given that probably what everybody has read in the news. That would mean that over time, that would be the increase of the health insurance cost. And if we maintain it at 93%, the employer would be paying that much of that cost. And if we want to sensitize that, meaning we want to reduce from 93 to 85, and the reason why we're going from 93 to 85 is because, generally speaking, those contracts and agreements we have in place allow for a decrease of the employer portion by 2% a year. Okay, so this is fairly simplistic. So if we go from 93 to 85 by fiscal year 2027, again, unless we renegotiate those contracts and agreements differently, right? But right now we're just sticking with what we know. The difference between the 93% coverage and the 85% coverage, knowing the assumption we put around the increase of health insurance costs, would yield a savings of about $69,000, $68,704. Okay. Do not react yet. You know, is it worthwhile doing it, etc. For $69K? That's a different conversation that we'll get to in a second.
Kareem, may
Yeah.
I just say something? So
Yeah, sure.
one thing to also consider, and I don't know that Ellen and I had this conversation or not, when someone doesn't take health insurance and it was going to be a single person, but they get it through their spouse, they would be paid 1/2 of the premium. So that's another thing that's under the line of benefits.
Are there a lot of people who do that?
No, I bet there
Okay.
are 6 people that do that, but I just want to, just for accuracy, just so. you
Okay, good. All right. I think we're looking more at sort of trending and conceptually whether it makes sense to move forward with that project. Okay, but thank you, Zoe.
But I was just thinking, if you're thinking about a reduction, if we're paying them half, perhaps you now pay them 35%. I don't know what that looks like,
Right,
but it's
right.
just,
So what you're saying, there's an upside to the savings. Okay,
There could be if we decide to
Yeah.
not just vary the percentage that the employer pays.
I mean, every quarter, we pay somebody $2,400 for a family plan. And so like, that's another thing too, is are you really going to be paying out someone for a family plan, or do you really pay them out for themselves? Just something like that.
Okay. So the next slide is what John was talking about. So that was found, the combination of what I found using, ChatGPT, also on Google, I did some searches, etc. The one that was given to me directly by a person, which is the CFO of the Windsor Central Supervisory Union, and you can see we're going from the macro to the micro here. Okay, it's pretty much that the teachers. The employer covers 80% for the teachers, and the teachers cover 20%. The support and administrative staff are at 92%, with a target to go down to 80% by annual increments. Okay, so even if we ignore all that noise above, because some of us might not feel comfortable that those numbers are 100% correct. And by the way, John, we will never find 100% correct numbers, because there's always subtleties within municipalities and towns, etc. Right? But I can tell you that for the USA, for example, this came from the Kaiser Family Foundation, so it's pretty accurate. It's still telling us that a number that's closer to 80-85% might be validated. Okay, now whether we want to go for it or not is a different conversation. All right. So the conclusion really that I would propose is, first off, we're not making a recommendation to go either way. We're just sharing the facts, right? And that's something we're going to discuss probably with Eric before we discuss it with the boards. Another question that may come up is the $69,000 savings plus extra dollars if we decide, based on what Zoe said, to reduce that benefit that's handed out to six employees between now and 2027. Is it worthwhile to go ahead and sort of walk through this change management process, which would require different negotiations at the contracts, also convincing folks that this is the right thing to do? One question that might be raised is there a possibility that we may be losing some employees because we do that? Well, it really depends how we compare to other municipalities around us. And two, the reverse side of that question is our health benefit structure. What is attracting high-performing employees? And then we can sit down and figure out whether it makes sense to go ahead and try to implement that, or have the select board vote, one way or another. They're gonna decide at the end of the day.
Kareem, I just want to correct what I said earlier. If you can just go back to the benchmarking page for a second.
Yeah.
I thought I may have misunderstood an email. I at one point we exchanged emails. I said, "Where did you get the benchmarking data from?" And you said ChatGPT. That as I recall it. I'm sure I was wrong. And obviously, you've said that you've gotten some things from Kaiser Foundation and so forth.
Yeah. So it's a mix of information, right? So some of it is from ChatGPT, but I can tell you that even if I want to go check whether ChatGPT is accurate, I can't, because they have backdoor access to some information that I may not have access to it anyway through Google.
Sorry, my only point is that I don't think ChatGPT. I don't think, I want to choose my words carefully. I believe that if we say that where we got our data from is ChatGPT, we should avoid doing that.
Well, we can say it came from the internet.
No. I'm not trying to obfuscate it. I think
Well, no, because wait a second, John. We're not obfuscating. ChatGPT gets it from the internet.
But can I mention something? We're talking about something extremely explosive here.
Yeah.
And so the best information you've got is actually the one you got word of mouth, 80%. And if you just stayed with that and a couple of other valid resources that are not going to upset people, your argument would not change, but it would have much more, whatever that word is, that people would trust it better.
Right.
Because you don't want anything to take your conclusion off, which is that if you took healthcare costs down to 80%, then there's a likely saving of 69%. That's what your finding is. And you don't want any of this discussion around it.
Actually, at 80%, it would be higher, because the 69,000 is at 85%.
Okay.
So I think, Kareem, I guess my suggestion is, I think this is a great framework. I believe that it's likely I believe that when we do what I'm about to suggest, we will come to exactly the same conclusion with exactly the same numbers. But I think to convince people, what I would suggest we do is just to continue what we did with the Windsor Central Supervisory Union. I don't see, we should be able to get from the surrounding towns, you know, all of the, just from Barnard, from Pomfret, from Bridgewater, let's just get from them, what do they pay? And I think if we had those 4 towns, we have Woodstock and those 3 towns and the school district, we would have all the information we need that would be credible, and there'd be no discussion about what the sources were.
So I just want to maybe, I don't want to say warn,
Yeah,
but keep in mind that like Bridgewater didn't even have a highway department for a year. I'm not saying it was all due to, you know, the benefits, but I'm sure someone's going to push back and say, great, would you like to have the same benefits as Bridgewater? Well, here's the end result. Again, I'm not saying that that's really what's going to happen, but I just don't want you to, I'm
No, no.
prepared for that.
no, Zoe, I think that's a very good point, and I think if that does happen, it's a good thing, and it informs the debate. I mean, we
Sure.
talk a lot about that. I guess my point is that what we don't, I feel that if we don't do this, I'm not saying we can't use, like, the information from Kaiser, I'm sure is very valid, and if there are specific sources that we can find on the internet, I'm sure we can, you know, from cities and so forth, articles or publishers over specific things, that's great too. But I think that if we don't look at the surrounding towns, that I worry that we come across, this has nothing to do with the analysis, I worry that we come across as the Finance Committee has an agenda to reduce healthcare costs. And therefore, that's why they're doing this, as opposed to, we don't have an agenda to reduce costs. Maybe we should be increasing the healthcare percentage. We just want to make sure we're in line and competitive,
So
you know, with other people.
in line with that thinking, is it, would it be better to take 5 towns that are of same kind of social structure or, you know, the same population? Because I don't know if you do it to Reading that it's going to really be a great comparison, or, you know, something small. I'm just saying you may want to compare apples to apples.
Fine, so we look at Stowe and we could look at, yeah, sure.
Yeah,
I guess
just-
the Windsor one is really good because it's right down the road. And it also to some extent covers this. I mean, it does cover the town. Anyway, my point is, I think we should do something like what Zoe said, or what I said, and what we did do with the Windsor Central School District. I think I'm worried that I'm not worried that this answer is wrong. I'm worried that people will, that we will get unfairly. I can't justify not making that work.
So here's the takeaway. I'm going to look for 3 or 4 towns that make sense, right? I'll propose it to the group. You guys say, yeah, why don't we go ahead with these towns before I start making phone calls, because it looks like phone calls work better than email. And then what I'll do also, I'll add a column with the source. That way, you know, there's no question about it.
Right.
And then what I'll also do is I will add a sensitivity, or this could even be boxed, right? Depending on what we come up with. That if the number, instead of going down to 85, would go down to 80%, instead of 69,000 would be that much. Plus, it doesn't take into account, you know, the reduction of whatever is refunded to people because they are on a spouse's plan, right?
Kareem, I think it's okay actually to model that reduction, that second reduction on the spouse's plan. Why don't you pick something that you think is, you know, like Zoe said, 35%, that's still significant.
Yeah, but I don't have the number. It's six people. I don't know what the value of that number is.
That model can be updated. I was just looking at my origin data. It's already out of date because it was the October MVP healthcare statement. I'm sure there's.
Yep, so Ellen, I'm happy to give
And
you.
also, we did have some open positions, which are not even in there. I mean, if you went back to that page, it says how many were single, how many were family, but you can't really guess on an open position because There's such a variation between the two.
So I'm happy to
Anyway,
give
so
you an
that could be
updated bill. I can give you,
I could add in the other payments.
Zoe, go ahead, you want,
yep, so it, the amount changed as of January 1st. So if you have, October numbers, those would be incorrect at this point. I think it was 589 for a single. I think it's gone to let's say 70. It went up, you know, that about that much. I think we have most positions filled at this point, with the exception of a highway guy. So it may be more accurate at this point. So I'm happy to send that over to you, and I'm also happy to give you the quarterly forego, which is about the 6 people, although we have had someone leave and we have added somebody, but it should be fairly accurate.
All right, folks, I have to hop off. Unfortunately, I'm going to the Vermont Lodging Association meeting. So I'll focus on the benchmark, and then Zoe, if you don't mind sending your updated information to Alan and me, and I'll update this deck, okay?
that's great, Kareem, thanks. I
All
think
right,
that's-
thank you.
Kareem, this is great to have an order of magnitude of what
Yeah.
we're talking about.
I agree.
Yeah. All right, thanks a lot. Bye.
All right, thanks. Okay, the last, oh, wait, the last item is a people database. This will only take a couple of minutes because we're not going to solve it here, but Zoe, Tom, Ellen, and I talked about, in the same way that a capital plan would help inform the budget discussions. The other area where the budget discussions were suffering from sort of similar confusion and lack of immediate information was around people and people costs. And Zoe, and so we thought that a kind of a simple, instantly available people database, similar in concept to the capital plan, but where instead of assets, there were people, would be a really useful tool to be taking through the budget process as well. We assume, Zoe, that you have that in some form. It seemed, well, we could observe that you didn't have it immediately in every meeting. And Ellen has done some thinking about conceptually what are you not finished yet, but was happy to kind of design something that could be used across the entire town. But before we did anything about it, we assume that you have either it, and then we would just like to see it, or if you don't have it, if how could we, or is there enough capacity to develop it between now and the budget process? Because having it to basically be able to, you know, when Ray is asking a question about, you know, this legal agreement should apply to that person, not this person, to have all of that in one place where he can even find it, but where we can just look and obviously, and there's issues about confidentiality and stuff. So we just wanted to raise this with you. And I don't know.
So I just want to clarify what you're asking. So what you're asking is there are 12 police officers. I'm just throwing this out. These are not factual. One is the chief, the sergeant, and then 7 under. Excellent. Within those, 4 people are in the union, 3 people are non. Is that kind of what you're asking?
And then, yes, the people that are
And then are you doing
governed by this.
Are you?
The people who are in the union are governed by this agreement, and this agreement says that this is what we pay them, and here's how much we pay them according to that agreement.
And we could actually, and that's how I did the FY24 budget, is I looked at that and I said, oh, so we have to pay this person, which is a PS3, a PS4 rate next year, and this is how much. So is that the information?
Exactly, Ellen, yeah, that's exactly what we're talking about. Ellen, do you agree with that, or?
Yeah, I would agree with that. Sure.
So I do have that. I don't have exactly who is union or non-union. We can go through that. And again, I want to just make sure with the union, it's okay that that's public. I don't know that. I would assume so, but I don't know.
We're also we didn't know about who can see the data. We assumed it was public and so forth, but it's also obviously sensitive. So maybe the next step here is Ellen, do you mind? Well, sorry, Zoe, I want to be respectful because Eric's not in this meeting. I don't think Eric will have a problem, Ellen, if you're willing to just have a quick meeting with Zoe, 15 or 20 minutes to just get a lay of the land. And then we can, and Ellen, then you can then say, here's the request we would have, or we can discuss it. And then we can, Ellen, you and I can go to Eric and Zoe and say, okay, this is what we would like to do. Here's how much time it might take. But I think we can't do that yet. We need Ellen, could you coordinate with Zoe and just understand what there is and what there isn't so that we could make an estimate of the time that we would need? Zoe,
And I think the best thing to do, because Eric is asking that everything filters through him, Ellen, I would simply make the request from him, what you need and when you need it by, and that way he can filter that to me. I think he would be happier if you did it that way.
okay, that's fine. So Ellen, why don't you and I talk about how to,
So
Okay.
just so you know, no objection on my end. I'm just trying to follow what I think
no.
Eric's gonna want.
Right.
fair enough. That's good. All right, so Ellen, you and I can coordinate briefly and then you can reach out and, or maybe I have to talk to him about things too, so we can decide who's gonna.
Okay.
Okay, that's our agenda. Is there any other comments? Oh, sorry, I think Tom Weschler was on, but he's disappeared, so. So as I said at the beginning, each of the areas we're in, we're facing some headwinds, but we've also made some progress. So I think we just continue onwards. For the first Monday of every month is our meeting, so we'll go back to our regular schedule next month.
And whatever you can give me in advance would be helpful. That way I can have that information for you versus, like you said, having to hear it at the meeting and then trying to get it for you
Yeah,
in the moment.
yeah, apologies for that. That's I'm at fault for that, and
No, no blame. Just I want to
Right.
be as helpful as possible.
yeah, I will try. I'm really bad at that, but I understand why you're asking. You're not the only one. Okay, if there's enough, is there anything else? No, hearing nothing. All right, could we have a motion to adjourn?
I'll make
I
a
second.
motion to adjourn.
Tom, will you second?
Yes.
All right, all in favor?
Um,
All right, thanks, everybody. Any opposed?
Thank you.
Thanks, everybody. Good discussion.
Bye.
Take care. Bye-bye.